You invoice a client for $6,000. It lands in your account. For about 3 days, you feel rich. Then April rolls around, or worse, that quarterly estimated tax deadline you forgot existed. And you owe the IRS $9,400 you don't have, because you already spent it on rent, on new equipment, on catching up from the slow month before. If that sounds familiar, this video is going to change how you handle every single dollar that hits your business account from today forward. If you're a freelancer, a contractor, or you run a small business where your income doesn't show up in tidy, predictable paychecks, where 1 month you're flush and the next you're staring at your balance doing math you don't want to do, this is for you. Not for someone with a W-2 and an HR department. For someone who runs their own show. By the end of this video, you're going to have a system where your tax bill is never a surprise again. Not because you got better at guessing, because you built a safety net that fills itself automatically every time you get paid. This isn't about becoming an accountant. It's about never feeling that gut drop of dread when you open a letter from the IRS again. That's what control actually feels like. Here's the thing nobody tells you when you start freelancing or running your own business. Nobody is withholding taxes for you. When you had a job, your employer quietly took a chunk of every paycheck and sent it to the government before you even saw the money. You never had to think about it. You never had to save for it because it was never really yours to begin with. Now, every dollar that lands in your account looks like yours. All of it. So you spend like it's all yours, because your brain hasn't caught up to the fact that 25 to 30% of that invoice already has the government's name on it. Add to that the chaos of irregular income. 1 month you land a big client and feel like you're finally winning. The next month, 2 clients pay late, 1 ghosts you entirely, and you're covering business expenses out of what should have been your grocery money. You're not bad with money. You're operating with none of the automatic guardrails a regular paycheck gives you, and you're trying to manage a business's finances using tools built for personal spending. That mismatch, treating business income like personal income, is the single biggest reason freelancers get blindsided by tax bills, dip into their safety net for daily expenses, and end every quarter in a slight panic. It's not a discipline problem. It's a systems problem. And systems problems get fixed with systems. Here's exactly how to build a tax safety net that runs itself so you stop thinking about it and start trusting it. First, open a completely separate, high-yield savings account. Not your business checking, not your personal savings, that exists for one purpose only. Holding money that isn't yours to spend, because it's already owed to the government. The number one reason freelancers overspend on taxes is that the money sits in the same account as their real money, so it feels spendable. The second you separate it physically, your brain stops counting it as available cash. It becomes invisible to your day-to-day spending decisions, which is exactly what you want. Say you're a freelance designer who brings in $7,500 this month. The second that payment clears, you move $1,875, 25%, into your tax holding account. Your checking account now shows $5,625, and that's the number your brain uses to make spending decisions. Not $7,500. That one change alone prevents the majority of tax time shortfalls. Second, set a fixed percentage. Most freelancers land somewhere between 25 and 30% depending on their tax bracket and state, and transfer that percentage the moment any client payment hits your account. Not at the end of the month. Not when you get around to it. The moment it lands. Willpower is not a system. If you tell yourself you'll move some money over later, later becomes never, especially in a feast month when spending money feels good. Automating it, even a manual transfer you do within minutes of getting paid, removes the decision entirely. You're not deciding whether to save for taxes every time you get paid. You already decided once, and now it just happens. A freelance copywriter earning an irregular $3,000 to $9,000 a month sets a flat 28% rule. A $4,200 invoice means $1,176 moves immediately. An $8,800 invoice means $2,464 moves immediately. By quarter's end, without ever trying to save. She's sitting on exactly what she owes, because the system did the saving, not her memory. Third, once a quarter, take 15 minutes to actually calculate what you owe based on your real income so far. using a quarterly tax calculator or your accountant's guidance, instead of blindly trusting the flat percentage forever. The flat percentage is your autopilot, but your actual tax rate depends on deductions, your business structure, and how the year is shaping up. Checking in quarterly means you catch it if you're oversaving, which means you can loosen up and enjoy some of that cash, or undersaving, which means you fix it before the number becomes unmanageable. A contractor who's been setting aside 28% all year checks their numbers in Q3 and realizes, after deductions for their home office and equipment, their real effective rate is closer to 21%. That's an extra several $100s a month that was sitting locked away unnecessarily. They adjust the automation down to 22% moving forward and free up real breathing room in their checking account. Money they can now direct toward the business or their own pay without any tax time risk. Fourth, instead of spending directly from whatever's left in your business account after taxes are set aside, pay yourself a fixed, predictable amount on a set schedule, like a paycheck you write to yourself, based on your average income, not your best month. This is what actually kills the feast or famine feeling. Your business income can be wildly irregular. Your personal spending doesn't have to be. By averaging your income and paying yourself a steady amount, the chaos stays contained inside your business account, where it belongs, and your personal life finally feels stable. A freelance photographer's income swings between $2,500 and $11,000 a month. She calculates her 6-month average after tax set-asides, $4,800. She now pays herself exactly $4,800 on the first of every month, no matter what came in. In slow months, the business account dips into its buffer. In big months, the surplus stays in the business to refill that buffer. Her personal life, rent, groceries, savings, never feels the swings again. Fifth, before you increase your owner's pay, invest in the business, or treat yourself to anything extra, build up 1 full month of your average expenses sitting in your business checking account as a buffer, separate from your tax holding account. This buffer is what makes the pay yourself a predictable salary step actually survive contact with a bad month. Without it, 1 slow month or 1 late-paying client breaks the whole system and you're back to panic mode. With it, a slow month is just a Tuesday, the buffer covers your owner's pay like nothing happened, and you top it back up when the money comes back in. The photographer from the last step builds up $4,800 sitting untouched in her business account, 1 month's worth of her owner's pay. When a client cancels a shoot and delays payment by 3 weeks, she still pays herself the full $4,800 on schedule. Her personal finances never know anything went wrong. That's the entire point. Think about a freelance web developer who spent his first 3 years in business the normal freelancer way, 1 account for everything, spending based on whatever the balance said, and getting hit every single April with a bill he'd have to scramble to cover, sometimes putting it on a credit card just to make the deadline. The turning point wasn't earning more. He was already making good money, that was never the problem. The problem was that his money had no structure, so it controlled him instead of the other way around. The month he opened a separate tax account and started automating a percentage of every single payment, something shifted. He stopped dreading his bank app. He stopped opening invoices with a knot in his stomach. 6 months later, when quarterly taxes came due, he paid them without blinking, because the money had already been set aside, untouched, doing exactly what it was supposed to do. He didn't get lucky. He got a system. Let's bring it together. A separate tax holding account. Automating a percentage the moment you get paid. Checking your real number quarterly instead of guessing forever. Paying yourself a predictable salary based on your average, not your best month. And a 1-month buffer that protects that salary from the inevitable slow stretch. None of these steps require you to earn more money. They require you to treat your business like a business with its own accounts, its own predictable payroll, and its own safety net, instead of treating it like a personal bank account that happens to get deposits from clients. That shift, more than any amount of income, is what takes you from financial anxiety to actual control. If this is helping you rethink how you handle your money, hit subscribe. This channel is entirely built for people who run their own business, not people collecting a W-2, so every video from here is going to speak directly to what you're actually dealing with. Before you go, I want to know, what percentage are you currently setting aside for taxes, or are you not doing this at all yet? Comment your number below, even if it's 0. No judgment, that's exactly why you're here. And if you're wondering how to figure out your exact percentage instead of guessing at 25 to 30%, That's next week's video. I'm breaking down exactly how to calculate your real number based on your specific state, structure, and deductions. Subscribe so you don't miss it.